Hi everyone, and welcome back to the channel. With interest rates as high as they currently are, we need to know where the best place to store our money is. And with CDs becoming more and more popular again due to these high interest rates, I thought it would be best to talk about the pros, cons, and differences between bank CDs and brokerage CDs. So let's get into it. So let's start with what most people are familiar with, and that's bank CDs. With a bank CD, you pick your favorite institution to put your money into. And usually that's going to be the place that has the highest interest rate, or maybe a place that you have a good relationship with. Once you decide on this bank, you go and get into a contract with them where you're going to give them this deposit. They're going to give you a high rate of return for a specific period of time. You're going to get interest payments every 6 months or whatever's agreed upon between you and the bank. Other than that, you're going to get your money back at the end of the term, and that's going to be that. If you want to get your money out early though, you have to go to the bank, talk to them, and you have to pay a fee depending on how long the term of the loan is. It'll be a different amount of time or interest that you'll have to give back to the bank. So if you want to get your money out early, you'll go get your money back, but you will have to pay a fee. So it could be that you break even, could make a little bit of money, or you could lose a little bit. One thing to note here though is that this is all based on you and how much money you have. You don't have a lot of money like some very wealthy people, so the bank is taking advantage of that and giving you a pretty good rate of return on your money. They're not giving you a great rate of return like very wealthy people are getting. But with a brokerage CD, that could all change. For a brokerage CD, you're now going to be looked at like you're a big dog. And with that, you're going to be treated differently. And that's because you're not just using your money to get a good rate. You're actually using the brokerage firm's money to get a great rate. And they have a lot of it. So that's going to give you the very best rates possible for a return on your money. With a brokerage CD, you're going to be getting a great rate. Here's Fidelity. Take a look here and see what you think. I think these rates are really great compared to a normal bank CD, at least from what we're seeing right now. You'll be getting some of the great benefits you got out of the bank with these brokerage CDs. Most people invest in CDs because they're a risk-free investment up to $250,000. And with brokerage CDs, you'll be getting that same FDIC protection that you got out of the bank. Even better is that with a brokerage CD, you don't have to go to the bank and take a penalty on your money simply because you need your money back before the end of the term. With a brokerage CD, you can simply sell your CD on the open market and get your money back without a penalty. Now I know what you're thinking, Christopher, there cannot be all of these great things without some bad. And like everything else, yes, there is a catch. While brokerage CDs might look great for their amazingly high rates and your ability to sell them whenever you want without penalty, there is some catch. Brokerage CDs are just like bonds in terms of how their value fluctuates. So if you have a 2-year brokerage CD and the interest rate goes from 2 to 3% when you go to sell the CD, you're going to have to sell it at a discount. So while there isn't truly a penalty when you go to sell your 2% CD, you're going to have to sell it for a discount, so you could lose money in that way. On the other hand, if you have a brokerage CD and the rate goes from 2% to 1% and you need your money back, then you can sell it for a premium. There is one big thing to note on all of this though. If there is not a market for your CD, then you can't sell it and you cannot get your money back. You're going to have to hold that CD until maturity. Another thing to be aware of when you're educating yourself about brokerage CDs is to make sure that your CD has a call protection on it. And that's because these CDs, like bonds, can actually have it where the issuer has the option to call your CD. They'll stop paying you interest, but they will give you your deposit back. So while these might give you a higher rate of return initially, you might not be getting that high rate of return for as long as you think you're going to be getting it. So be aware of that. This is especially important to think about because interest rates are expected to drop within the next year to year and a half. So you might look at a brokerage CD and think, man, this has a really high rate of return compared to other ones in the same term length. I hit the jackpot here. I found the golden egg. But actually, you look and see, and it actually has a call option on it, and you won't be getting that high rate of return if rates go down and they call on that CD. So make sure you're paying attention to that. Make sure you leave a comment below where you're going to be putting your money. Is it a brokerage CD or a bank CD? Or are you thinking about something else? Let me know below in the comments. If you want to see the highest bank CD rates I could find, check out this video right here. I'm going to be doing another video about brokerage CD rates, so make sure you stay tuned for that. If you like this kind of content, hit that like button and consider subscribing. It means a lot. If you have any questions or want to just know any thoughts on where you're going to be investing your money, make sure you leave a comment below. Otherwise, guys, I'll catch you in the next one.